Okay guys, this is day 5. We'll get right into the questions. Question number 1 is, what is a speculative risk? A speculative risk is a risk with the possibility of gain or loss. A good example would be like gambling. You could win, but you could lose. So in our industry, we refer to a speculative risk as a risk that could bring a gain or a loss. Question number 2, what is the primary purpose of life insurance? And the primary purpose is to create an estate and provide financial protection to beneficiaries. That means your income is secured. We usually do an FLS. When issuing someone a life insurance policy, we want to make sure what their actual needs are, because this is to create an estate and also to insure your income. Okay, question 3. Who is responsible for paying premiums? That would be the policy owner. So not the insured, not the beneficiary. The only person responsible for paying premiums would be the policy owner. Question number 4. What is required to insure another person? That would be insurable interest. There's no other requirements. There's no credit requirements. There's no financial requirements. But they do want to make sure that this is either a spouse, a family member, a child, or a business partner, someone that you would not want to see lose their life, basically. Question number 5. What is not a type of term policy? That would be modified whole life, any type of whole life. If the policy lasts for the duration of your life, it's not a term. It doesn't fall under a term life insurance policy. Question number 6. What is renewable term? So renewable term is a term insurance that can be renewed without proof of insurability. So that's the type of policy that you get where you do, I believe, pay a little bit more. But at the end of the term, you can renew it without having to get a physical, get blood work done. You don't have to prove insurability. This type of policy allows you to renew without doing anything else at the end of the contract, except for potentially paying a higher premium because now you're an older age. Question number 7, which policy guarantees a cash value? That would be whole life. Question 8, a policy requiring proof of insurability to renew is what? That would be non-renewable without evidence of insurability. That's a type of term policy. Of course, whole life policies you never have to renew because you get them and you're insured for your whole life. So this is a type of term life policy that does require you to prove you're insurable in order for them to renew it at the end of the term. That is non-renewable. Question number 9. What does underwriting evaluate? So underwriting actually evaluates the risk of insurability of an applicant. So they want to make sure that, based on what their standards are, you meet the requirements to actually be insured. Previous conditions, lifestyle, things like that. Underwriting takes that into account. Question number 10. Life insurance premiums are based on what? Now that would be mortality, interest, and expenses. So life insurance premiums are going to be based on your age. They're going to be based on your hobbies, any pre-existing conditions, and they're going to be based on what your actual expenses are. So that's why we do the FLS, and we determine like what your income is and what your actual needs are, and that's what we're determining on. So not your car, unless it's a motorcycle, and not like things that you buy or anything like that. Just your age, your health, your interest, and your expenses. Okay guys, that was day 5. Click the next video for day 6.